Good afternoon. My name is Scott Redler, Chief Strategic Officer of T3Live.com. Welcome to today's recap and look ahead. It is hump day and we're past Wednesday. And we've had some decent days of trading. We're in earnings season and there's been a lot of back and forth action, some things to be long, some things to be short. Overall, the market's been trending higher, and I'm sure you've heard on TV 1,000 times about S&P 2100, Dow 18,000, and everyone's looking for a top or asking can we go higher when they should probably be looking for setups to trade if they trade for alpha and cash flow. And if they are in stocks longer term, don't worry where we are. Just keep with your process, putting monthly flows in depending, where you live and how old you are. Well, anyway, look at the chart here of the S&P. Still, I know we've come a long way since the double bottom lows or from when we held higher and reclaimed the 8 and 21-day moving average, which put us back in a tactical uptrend. From then we had so many different pivots to trade. We've been in this, uptrend above the 21-day moving average for the majority of the time. So basically, you didn't have to catch a bottom, but when we confirmed the double bottom on this red dog reversal reclaiming the moving averages, that's 1925. That was 175 handles ago. Well, anyway, we've been maneuvering the range all the way up. The most recent spot was when we took out this prior pivot, held it, and then took this out, and now here's where we are. So, with that said, a little bit of a doji close, not the end of the world. Low 2096, which is higher, than 2091, and we made a high and kind of in there. Some guys might think that we close below a prior high, get short, but at this point, I think we're just kind of grinding and trending, and just because we came off highs doesn't mean it's a top. And obviously all the way through here, you don't want to be going all in long, especially since we're coming into bigger resistance, moving forward. So what does that mean to you and I? That means that you have to come in, read my note every day, look for tactical plays that could last 1 day, 2 days, 3 days, and then even on the short side. Our focus on the VTF this morning were the banks, right? Goldman Sachs, one of the last to report, wasn't a great report, reversed yesterday, figured maybe, it's priced in and we can get some more action. So here's your Goldman Sachs. You can look on my Twitter feed, you'll see that I posted the chart probably close to 9 o'clock. What did I like about the chart? You had support right here, you had a gap that held above the moving averages on earnings yesterday, which were not fantastic at all. It reversed higher, giving you a red dog reversal around this pivot of 157 for one entry, and then when it closed above this for another. Then you could have been home, long overnight like I was, and then when it closed or went above the pivot point of 163, 167, 163.70, I'm sorry, you could have added to your tier one and then sold along the way. I actually, took off the rest of the trade above 167, even though I do think it could trend and grind up towards 172.93. It actually held in there when the market sold off at the end of the day. So, if you're in there still, I still think it looks fine. Before that, I had JP Morgan on for that nice day and a half trade, and my whole tactic here. Day one, you buy. Day two, you try and buy more. Day three, you sell. And at this point, it's healthier than most other banks. It's above the 200-day, but I'm just taking trades here. I'm not sitting in a bank portfolio. Guys on the VTF were pointing out how clean the move in Morgan was. Finally, above a key level here. This gave you a potential day one, day two, so maybe you get more tomorrow depending on what the market does. But the banks all went out strong. Why did the banks go out strong? Maybe because the TLTs got hit pretty hard. I know a lot of guys out there think that bonds don't trade technically. Whoever those people are, everyone probably knows. But at this point, you had an inside wedge. It traded, it was above this 131.31. Once it got below it, you could have got out, or you could have said, wow, you had a little red dog reversal and an engulfing move. That was your out, just to see what's next. If this was a chart, if this was a stock, you would be out of the way and probably pretty darn short overnight thinking you get downside follow through. Since it correlates to bonds, maybe you'd be a little less adamant about it. But this to me is saying you probably don't want to be long this. If anything, short. So what does that mean? That probably means that the TBTs looking to break out, nice engulfing day, and that typically means the banks are going to continue to do better. So we'll see. So that's one spot. Another spot was in tech land. We talked about NFLX being in the penalty box, but being in the penalty box doesn't mean that you can't trade it. It just means it might not be at all-time highs soon. So a lot of people ignore stocks that aren't going to be at all-time highs, but there's tactical trades. I talked about the what, the 94.20 pivot being yesterday's low, saying if we trade below it, some might short. If we trade back above it, there's a red dog reversal for a tactical long because it's calculated. I missed it, but a lot of guys caught it in the VTF because they know this tactic very well. Here is your penalty box, right? It's a big gap that's open that we'll see if it stays the penalty box or creates an opportunity. Here was your red dog reversal. Quickly it traded below this. Traders thinking you can have downside follow through. Oh my God, get short, get short. And it went below 94.20, went to as low as 93.14, reversed up. You could have been a buyer there, and this held all day, and you made yourself a nice $2.60 with $1 risk. And now it closed pretty strong, so we'll see what's next. If it opens down tomorrow, maybe you buy it, goes through this, it goes up, it opens up, and you're in it, trim some into resistance. But this was a nice tactical trade looking for a setup versus a top. What did IBM do in its penalty box? Look at that. Real quickly, that doesn't look like, it looks like people are saying, I think this is on sale. So now right here, it's already back up to gap resistance, showing you that there is appetite for this stock still, that they're trying to discount, the earnings. So anyway, see if it goes inside a few days and then gets above this. Maybe you get a trade into the gap for cash flow. And then at some point, the pattern rebuilds and then, other points of reference are all the way, are out here. But all in all, it's good to see that they didn't fall apart, and that's why the market's not falling apart. And one stock that we've been focusing on as a breakout candidate has been BABA, and it's been frustrating. It's had false breakouts. We've talked about it for a few weeks, and BABA finally gave you a nice breakout today. We've been eyeing this $80 level, and finally that maybe Yahoo came out with its numbers, so it gave you a cleaner trade. We talked about when BABA, came back on the map. It came back on the map. Stocks, guys like red dog. How do stocks come back on the map after being broken like it was? Remember this gap down that never got filled? Okay, this said it's going to go in that direction. Here's a gap up that never got filled, and then that showed that it's going back in this direction. So this was the price level we were looking at after a few attempts. Finally, got up. It closed pretty well, and who knows? Maybe it works its way back up to 84. I'm still in this very small because I feel like I had to be. I've been waiting for it so long. I made good money intraday, and now we'll see if we get a little bit more overnight. Guys wanted me to talk about Disney. Disney actually was a good little buy the dip today. I listed this chart Monday morning just to show you that I put charts in all different sectors, not just FANG names. I was long it on Friday. I added here, sold yesterday, and then today, because I sold yesterday, I had the luxury of buying it back. And at this point, it's flagging again and trying to regain the 200-day and still looks good. It's supposed to have another big movie besides even Jungle Book. I think it's the one with Captain America. But anyway, holding sideways of another day or so, and maybe it'll be a breakout bull flag pattern. But it goes to show you technical patterns can pay you if you know how to read them. It doesn't matter that it reversed here. It doesn't matter if you got out here and broke here. This is a whole new setup over here. Okay, so anyway, that was Disney. Apple gave us a small little trade, started red, went green, gave a push. This still has a lot to prove. I was in it most of the day, and then I didn't hold it overnight. Why did I get in it today? Because, I got stopped out here, okay, which was up there, when it lost to 200 days, so down 5 or 6 points. I figured, I'll try it for it to go from red to green, and once it got back above yesterday's low of 106.23, I added and gave you a move to 107, but came off. So now we'll see what happens here, if it could go sideways for a little bit and try and retrace or not. Just something to do. In a market that is a bit overbought, but money's rotating, you got to find things to do. Patterns that are set up, that are tight, that give you good risk-reward scenarios moving forward. Not that many earnings today after the close. LVS I saw was down a little bit. Qualcomm, I'm not sure. Tomorrow's a bigger day. You have Google, you have Microsoft, you have some others. So, I got to jump today. Like I tell everyone, you have to have lifestyle. I'm training about 10, 15 kids to run a 5K, including my son, so I got to make sure I'm on the 445 ferry. We're running it in June for charity. It's a great thing to do with your kids. Get out there, run. When they're feeling good, they tell you a little bit more about their day than they're sitting at the dinner table with their iPads. Have a good night.